Welcome to the February 11th, 2019 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and president, McGowanGroup. We look forward to bringing you a fast-paced tour. A financial weatherman's going to show you the charts and graphs that go with today's program. We'll walk through the major headlines, the impact, and some of the possibilities ahead for 2019 based upon real research by the McGowan Group team. 10 strong, a brilliant team at your service. Go to NetWorthRadio.com and you can actually fill out your preliminary client questionnaire for your own brainstorming session at the Crescent with the team that cares, McGowan Group. First chart, this is 3 years on the Dow. Year to date up about 7%. Let me cover the last setbacks, the last few setbacks. 2016, earnings on the S&P 500 actually dropped. They dropped about 10%. And you can see what happened there in 2016. Earnings began to grow, had a huge increase, around 60%. That was concurrent with, we've got the election rally, and we've got earnings going up on the S&P 500. Seriously good correlation. Whoa, that's a pretty good spike to 26.5 in the Dow. This time last year, we were on our way to 23,000 in overnight lows. That was the rebalancing correction. Then we had a nice rally. Everybody wanted to buy Amazon right here when it was 2,000. And of course, a correction began. And the Federal Reserve had something to do with that. That's coming up here in just a few minutes. We'll cover the Federal Reserve. Well, there's your correction at the end of the year. Washington threw everything that it could at the markets, including disharmony, arguments, the government shutdown, trade wars, everything that they could come up with to make us uncomfortable. And the mini panic of 2018 bottomed right here, about 22,000, just below actually. That was Christmas Eve. Merry Christmas from Washington and the financial markets. Mini panic ended right here when the Federal Reserve said, hey, I think we're done for a while raising the short rates because you guys are freaking out. And we've had a nice rally since then. Dow's up about 7% year to date. Let's look at some of the other asset classes as we go through your fast-paced tour of the global financial markets. These are the pipelines. Pipelines making more money than ever. They're kind of leading the earnings charge. We saw Buckeye report this week, nearly 3 times as much profit as the same quarter last year. Revenue increase was 14%. The underlying pipelines look like they're on their way back to investment grade with the amount of cash they're generating because the oil pipes are full coming out of the Permian. So this is a pipeline index. That's $27 barrel oil. This is the mini panic of 2018 and tax loss selling, and we're sporting a gain year to date near 10% on this 3-year chart. What do we have to look at going forward? Well, when we look at other asset classes, these are the emerging market indexes. They're up about 8%, a little more than the Dow year to date, and they were impacted more harshly by the Federal Reserve tightening cycle, evidenced by the currency collapse. Money appears to be flowing back in. Here's the emerging market bonds. They're up about 4.3. By the way, the U.S. high yield index is also up about 4%, plus you get the yield on top. This reversal in part corresponded exactly to the Fed saying we're done because it puts more pressure on non-dollar bonds and on those that have to pay back money in dollars because it's harder to hedge when you have to pay more for a dollar hedge. Now we go to the technology index, a decline of near 30% for that index, lickety split. The peak in tech appeared to be June. It has had a bounce back, up nearly 11% so far this year. One of the things we're seeing, like Twitter came out with good earnings this week, but the stock's down, and it's down here at the end of the week. What gives? Well, when you look at the absolute numbers, expectations are very high, and the conclusion was not as many people going to Twitter, and so the optimism that surrounded technology makes it very hard for those companies to perform well enough. Energy's already had its bear cycle, so energy infrastructure is one of our favorite asset classes going forward. Okay, who's making money? Well, S&P 500, we got 2/3 of the companies reporting, and it's about a 14% gain in earnings growth. That's good. It's the last quarter for the big advantage of the corporate tax cut, so we'll see what it looks like for the second quarter. That's going to be important. But who's doing well? Energy companies, 99% gain in profit over the year prior. Absolutely huge. 14% gain in sales, 14% gain in communication services, although it hasn't lifted AT&T up off the pavement. They've been there about 20 years. Here we go. Now, this was just a quick look at the different sectors. Exploration and production and energy up 340%. Looks like this could be a favored category for money flows for the rest of the year. Now let's take a look at the interest rates. Federal Reserve probabilities in Bloomberg that we might actually have a rate increase. That would be right here, okay? 98% likely to 2/3 likely they're just going to stay where they are. That's what changed on Christmas Eve, is that relentless Fed tightening cycle. And there's a 0.2% probability that they'll actually raise the rates again. There's a larger probability that they may trim it back at some point over the next year. So they're done raising short rates. That means with global interest rates, look at this. 10-year Treasury in the United States, 2.63%. Loan money to Mexico, you get 4.5%. Loan money to Argentina, that doesn't sound like a good idea. You get 9%. And yeah, let's go to Greece and get 4%. Oh, no, thank you. I'll take that Treasury. Global interest rates very low. What does this chart tell us? Anything paying over 6% has some gain potential, some relative attraction going forward, and that underscores the potential for global high yield. Cash rates are now 2.4% if we go to the best paying money markets, which we do for the ultra safe money. And it also says the competition of rising short rates against high cash flow assets appears to be over, and we're getting appreciation in many cases that's competitive with or better than the Dow. I'm Spencer McGowan, your financial weatherman. Join us each and every week and get more information at NetWorthRadio.com. Be sure to fill out your preliminary client questionnaire. Set your time for a 1-hour brainstorming session. Would love to make a difference in your 2019 results. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.